Look at this chart. At the start of 2024, gold was trading just above $2,000 an ounce. By the end of 2025, it was closing above $4,300. That's a 100% move in just 2 years. So what happened from 2024 that completely changed the gold market? And with prices already this high, what could come next in 2026? Let's break it down. Hey everyone, welcome back to the channel. In this video, we're going to walk through the gold price story starting from 2024. First, how the price moved month by month from 2024 to the end of 2025. Second, who has been buying all this gold and why? And finally, what big institutions are forecasting for 2026, including both bullish and bearish scenarios. If you're interested in gold, macro, or just understanding what's driving markets right now, stick around. Price journey. 2024 gives 2025. Let's start with the raw price action. Because the chart alone already tells a powerful story. In January 2024, gold closed around $2,037 an ounce. For the first quarter, it mostly stayed in the low 2000s. For example, the March close was about 2,232. Then in April 2024, things started to change. Gold pushed higher and closed the month near 2,286. And in May, it held above 2,320. By the summer, we saw a clear breakout. July closed around 2,448, August around 2,503. And by September and October, we were consistently in the 2,500 to 2,750 range. December 2024 finished at roughly 2,624 dollars an ounce. So 2024 took us from the low 2000s to the mid 2600s. Then 2025 is where the move really accelerates. January 2025 closes at about 2,801. By March, gold is already above 3,100. And in April, it closes near 3,289. Through the middle of 2025, it consolidates around 3,300 to 3,450. And then in the autumn, it makes another big leg up. October closes right around 4,002. And December 2025 ends at about $4,315 per ounce. On average, between 2024 and 2025, the average closing price is roughly $2,983. And over that 2-year window, gold is up about 109%. So you're not imagining it. This is one of the strongest 2-year runs for gold in modern history. 2024. Record demand and breakout. Now, why did 2024 become the breakout year? According to the World Gold Council, total gold demand in 2024, including over-the-counter investment, reached a record 4,974 tons. The average gold price for the year was around $2,386 an ounce, up 23% from the previous year. And the Q4 2024 average of about $2,663 was also a record. On the demand side, several forces came together. Central banks were huge buyers. They purchased more than 1,000 tons of gold in 2024, the third year in a row above that level, with about 333 tons added in just the fourth quarter. Investment demand rebounded. Bars, coins, and OTC investment picked up as investors looked for protection against inflation, political risk, and the expectation of lower interest rates in the coming years. At the same time, we had persistent geopolitical tensions and worries about global growth and debt, which increased gold's appeal as a safe haven asset. So 2024 was the year where structural demand, especially from central banks and long-term investors, pushed gold decisively out of its old trading range. 2025, super rally year. in 2025. That strong foundation turned into a full super rally. On the price side, gold broke through several psychological levels. It moved from 2,801 in January to breaking 3,000 in the first half of the year, then crossed 4,000 by October, and ended 2025 around $4,315 an ounce in terms of demand. 2025 set new records. The World Gold Council shows that global gold demand crossed 5,000 tons for the first time, driven by strong investment and continued central bank buying. Investment demand almost doubled to about 2,175 tons. Out of that, ETF holdings increased by roughly 801 tons, and bar and coin demand reached a 12-year high. So in 2025, it wasn't just central banks anymore. You had ETFs, private investors, and institutions all piling in at the same time, turning a strong trend into a real momentum move. Who is buying? Central banks and investors. Let's talk a bit more about who is behind this buying, because that's the key to understanding whether this move is sustainable. First, central banks. In 2024, they bought over 1,000 tons of gold, with countries like Poland, China, India, and Turkey among the largest net buyers, continuing a multi-year trend of reserve diversification away from the US dollar. In 2025, official sector demand remained very strong at around 863 tons, which is still far above the long-term average. This kind of steady central bank buying is very different from speculative trading. It's long-term. Policy-driven demand got second. Investors. In 2024, investment demand, including bars, coins, and OTC, recovered to around 1,185 tons. And ETF outflows that we saw in earlier years slowed significantly. In 2025. That turned into net ETF inflows of around 801 tons. And bar and coin demand reached levels not seen in over a decade. So you have a powerful combination. Central banks plus long-term investors, both adding gold at the same time. 2026 outlook. What happens next? Now, the big question. After almost doubling from early 2024 to the end of 2025, what could happen in 2026? The World Gold Council doesn't say gold will be at exactly this price, but in its 2026 outlook, it outlines several scenarios depending on how growth, interest rates, the US dollar, and geopolitics evolve. Broadly, the range they discuss runs from roughly a 20% downside from current levels in a strong growth, higher rate, stronger dollar environment, to about 30% upside if real yields fall, growth slows, and geopolitical risks stay elevated. On the bullish side, you have some big banks. Goldman Sachs has raised its end 2026 gold forecast to about $5,400 an ounce. They see ongoing central bank diversification, expected Fed rate cuts, and continued investor interest in gold as a hedge as the main drivers. Goes even further, projecting a potential peak around $6,200 an ounce in 2026, with a possible high between March and September, and then a modest pullback to about $5,900 by year-end. Other major institutions, like J.P. Morgan and others, cluster in the 5,000 to 5,500 range, with some longer-term paths to around 6,000 by the end of the decade if structural demand stays strong. But there is also a bearish scenario you shouldn't ignore. The World Gold Council and several analysts warn that if we get stronger than expected economic growth, higher real interest rates, and a stronger US dollar, then gold could see a 5% to 20% correction from these elevated levels, especially after such a large move in 22.4-22.5. So you can think of 2026 as a tug of war, lower rates, Strong central bank buying and geopolitical tensions pull gold up. Strong growth, higher yields, and a strong dollar pull gold down. No one knows exactly which side will win. But those are the forces you need to watch. Macro and structural story. Stepping back. The bigger story behind this move is structural. Gold is increasingly being treated as a core reserve asset by many central banks, not just a crisis hedge. And that official sector demand has run above 1,000 tons per year in 2022 to 2024 and stayed very high in 2025. At the same time, supply grows slowly. Mine production is relatively flat, and recycling only responds gradually to higher prices. So you have a market where demand has shifted up, but supply cannot easily adjust, which is a classic recipe for sustained higher prices. Add to this the macro backdrop, high debt, concerns about currencies, and lower expected real rates, and you can see why many analysts talk about gold entering a new structural regime, not just a short-term bubble. What this means for viewers. So what does all of this mean for you? On the one hand, there are strong arguments for gold, structural central bank and investor demand, slow supply growth, and a world where people are more worried about inflation, debt, and geopolitical shocks. On the other hand, gold has already doubled from early 2024 to late 2025. And that means the risk of corrections and volatility is also higher. If you're thinking about gold, it's important to decide your time horizon. Are you hedging for years? Or are you trying to trade short-term moves? Choose your vehicle. Physical gold, ETFs, or mining stocks all behave differently. And manage position size so that even if we get that 10 to 20% correction, it doesn't blow up your portfolio. This video is not financial advice, but it should give you a clearer framework to think about where gold stands today. Now I want to hear from you. Are you bullish or bearish on gold going into 2026? Let me know your price target in the comments. If you found this helpful. Don't forget to like the video, subscribe to the channel, and share this with someone who's trying to understand what's happening in the gold market. Thanks for watching, and I'll see you in the next one.